Good morning or good afternoon, depending on where you are in the world. I'm delighted to welcome you to this webinar about ultimate beneficial ownership in the Middle East. My name is James Whiteman. I'm the CFO and MD MENA at Themis, based in Dubai. It's a privilege to be moderating today's session, which we've organized in partnership with Dow Jones Risk and Compliance to conclude our Middle East anti-financial crime webinar series. I know we have audience members dialing in from across the Gulf, Levant and North Africa, as well as all corners of Europe, North America and the Asia Pacific region. It's great to have you all on the call and very much look forward to fielding your questions to our panelists later on. There really couldn't be a more timely moment to be discussing ultimate beneficial ownership with the recent Pandora Papers revelations and wave of global legislative initiative to increase corporate transparency. This topic really remains at the very top of anti-financial crime agendas in many jurisdictions around the world. In the Middle East too, new rules are being introduced to increase the visibility of beneficial ownership. And today we're going to be exploring the impact of these changes and the reasons why they're so important for organizations operating in the region. Our panel of expert speakers brings to the table a diversity of threat-based regulatory and practitioner perspectives around corporate transparency and UBO compliance. And it's a real pleasure to introduce today to you Ludmila Starobor, Abeid Al-Mahiri, Duncan Hames and Gavin Proudley, and really looking forward to hearing all of our panelists' insights today. So to start us off, I'd like just to share with you a little bit of background information about each of our panelists. So in no particular order, very much like to welcome Abeid Al-Mahiri. Abeid is currently working with the Ministry of Economy as AML supervisor and advisor. Prior to that, he worked with the Dubai International Financial Centre, or DIFC, authority as VP Legal Affairs, and worked closely with the Registrar of Companies regarding beneficial ownership information regime within the DIFC. In addition, Abeid holds a membership at the National Registrar of Subcommittee to ensure alignment and the implementation of beneficial ownership procedures within the UAE. Ludmila Starobor. Ludmila is a Vice President and Money Laundering Reporting Officer at Abu Dhabi Finance. She's over 15 years of diversified experience within global and regional corporate and retail banking, including 6 years in the UAE in high-profile compliance roles. During her career, Ludmila has completed hundreds of AML and sanctions investigations and is a member of the Association of Certified Anti-Money Laundering Specialists. Next, Duncan Hames. Duncan leads the public policy, business integrity and research teams of Transparency International UK, the British chapter of the worldwide anti-corruption movement. He's also a member of the RUSI task force on the transatlantic response to illicit finance, formerly an MP and still a chartered management accountant. He serves as a non-exec director of South London and Maudsley NHS Foundation Trust. Gavin Proudley. Gavin is Global Director of Due Diligence at Dow Jones Risk and Compliance. He's been helping clients manage financial crime, corruption, reputational risk for over 10 years. He works with large financial institutions, particularly with IPO and other investment banking teams, as well as supporting businesses in managing high risk and high value relationships. Prior to joining Dow Jones, Gavin was a director at EY's forensic practice and also has worked in government for 11 years. So looking, firstly, I think internationally, there has been a real recent tide of legislation aimed at cracking down on corporate secrecy and untangling webs of complex corporate structures. Duncan, I wonder if you could just tell us a little bit more about the factors motivating this regulatory sprint to increase visibility of ultimate beneficial ownership across different jurisdictions, and what role do big revelations like the recent Pandora Papers story play?
Well, thank you, James. Many years ago, the IRS in the States understood that following the money was sometimes the best way to go after those up to nefarious activities. And even 20 years ago, attention of policymakers was focusing on money laundering as a particular area of concern when dealing with issues as wide-ranging as counterterrorism and illicit drugs trade. And we as Transparency International came to the issue because of our close interest in corruption and how kleptocrats, as we call them, those who abuse their position in public office very intentionally to enrich themselves, then need to launder the proceeds of their activities. And a lot of this became more popularly understood after the Panama Papers some 5 years ago now, which really drew attention to the role of networks of shell companies in jurisdictions where the ultimate beneficial ownership of those companies remained private and operated secretively, as a key vehicle for how these individuals might evade any kind of accountability for their actions. And sadly, as the Pandora Papers show, we are still some way from bringing accountability to those arrangements and ensuring that everyone is equal before the law. Not through a lack of effort in some quarters, however. The European Union in particular, with the 5th Anti-Money Laundering Directive, as it is now, really brings a lot of weight behind the requirement for public registers of company beneficial ownership, something we've had in the United Kingdom for 5 years now. And mind you, that itself is an arrangement which still needs to be made rather more robust and to improve the integrity and the accuracy of the information available. Off the back of the EU, we've seen this start to emerge as more of a global standard, with other financial centres that are not bound by the rules of the European Union seeking to align with the 5th Money Laundering Directive. Examples of that were the Jersey, Guernsey and Isle of Man, the UK Crown dependencies, and more recently, at the encouragement of the British government, the British Overseas Territories, including the British Virgin Islands that appeared so prominently in the Panama Papers, now committed to introducing its own public beneficial ownership register by a deadline of 2023, which really isn't that far away now. And then the final step on the progress made so far must be the Corporate Transparency Act, which came into law in the United States at the very beginning of this year, and which is now subject to a rulemaking process in the federal government and with the support of Congress. And so whilst that's not a public register, we will see some of the things that you saw in the Pandora Papers being much harder to hide from both the FBI and the IRS with the introduction of a central register of company beneficial ownership there. So increasingly, in a kind of wave of jurisdiction after jurisdiction, we are establishing a global standard of transparency around who really owns companies wherever they're registered.
Thank you, Duncan. Yeah, that's a fantastic macro scene setter, I guess is the best way of putting it. So much appreciated. Abetted, how do you see these initiatives that Duncan's referring to increase corporate transparency playing out in the Middle East? There have been some particularly promising beneficial ownership reforms in the UAE over the past year and a half. So I'd be very interested to hear more about these, as well as how they sit, I guess, within the broader regional context.
Recently what we've done is we began by enhancing our legislative framework that is applied on all legal persons in the UAE and have been implemented by various registrars in the UAE. And we began with that by introducing first the Cabinet Resolution 58 of 2020 that sets out the procedure for identifying the beneficial owner information and also the type of basic information that need to be held. And how we did it is we have more than a stage to that. One will be a register to be created in the registered office of that legal person, submission of the basic and BO details that will be done to the registrar. And then on top of that, it's what we have is, or we worked in parallel as we introduce our legislation. We created a centralized registry, which is a national economic registry that contain all the public, or like let's say the basic information of all legal persons in the UAE, and it's also available to the public for them to access it right away through a search program engine, while there is a backdoor to that NER where we will hold the more details of the basic information, the more details about the shareholders, and more details about the BO of those entities, which is also provided to the law enforcement agencies and competent authorities in the UN, obviously through the right channels for international cooperation. Alongside with that, and to ensure that also the compliance of the legislation that was enhanced that governs the BO procedure in the UAE, it was a bit hectic for us, or it was a big challenge that we have around 40 registrars across the country, and to align all these registrars together, we had to create the registrar subcommittee where the registrar across the country almost sits on a weekly, once every week, to discuss anything that is related to the procedure of the UBO. The challenges each registrar will encounter and how we can tackle it in terms of how worse it gets to follow the complex structure or the nominees that will be sitting behind those vehicles and identifying those and who is the beneficiary of those entities. And it was a bit hectic for them in the beginning. And as we move forward, we introduce guidances, we introduce templates that has been applied by all of them, declaration, checklist in terms of what they should do during the inspection of those register, inspection of the documents that have been submitted to the registrar. And let's say that also was for us in different stages. The first stage was the collection of the data. Second stage was the verification. And the third stage is the analysis of that data, which is also aligned with our national risk assessment. And in brief, that was the UBO regime that we applied. And obviously, what made that even easier to be applied or to obtain those information was the second or like the following cabinet resolution, which put or sets out the sanction that will be applied on those non-compliant entity. And the sanction is not only related to the submission of the BO, it's the submission of the BO details, the basic information, the creation of the registers, the submission or the declaration provided, even the information itself. If anything is missing, they will be sanctioned for it. If they provide any misleading information, also they will be sanctioned for it. And those sanctions are not only monetary sanctions that comes in different stages, where it starts with a written warning, then administrative penalties with an amount that will go all the way up to 100,000, including 1 year of suspending that license. And in brief, that is what we've been doing recently.
Interesting to hear what you've been up to, and I guess many steps and many initiatives that you describe over the last year since, but I guess, off the back of the FATF report, but great to see such a fast moving and proactive approach to making progress and change within the UAE. So fantastic. I think now perhaps is a good time to bring in the audience through a live poll, just to engage really, or gauge everybody's perceptions of the themes that we're talking about. The question I think I'd like to pose: are you confident in your organization's ability to effectively identify ultimate beneficial owners? So 5 options there. Yes, we devote the necessary resources to obtaining beneficial ownership details. Secondly, to an extent, but we should do more. Thirdly, no, we do not have UBO identification procedures in place. Fourthly, no, because I do not think UBO identification is needed in my organization. And lastly, I'm not really clear as to what obligations we have in this respect. So we'll just give everybody a minute or so to complete that and cast their vote. Perhaps in the meantime, it's just nice to highlight that there are a number of legitimate reasons why individuals might make use of offshore structures, including to protect assets from criminal attacks or perhaps unstable governments. However, the anonymity associated with many of these offshore structures can also be exploited, as we know, to avoid paying taxes or conceal dirty money, with very real and I guess often devastating effects on ordinary citizens. So it's just as important to make sure we're asking the right questions about some of the real individuals who lie behind these companies and legal constructs. So timing wise, I hope most of you have been able to vote. I don't know if we can now close the poll. That would be fantastic. So I think to look at the poll, you need to look under the polling section on the top right, the closed section, to be able to just pull that up on your screen, with some very interesting results coming through. The poll suggests that that there's still a long way to go, or still a fair way to go when it comes to effective and efficient UBO identification by organizations across the Middle East. I mean, from your perspective, as an experienced compliance professional working in the region, what are some of the key challenges when it comes to the gathering of beneficial ownership information, and how are these being overcome?
Thank you, James. It's very interesting question. So as mentioned before already, if talking about specifically the UAE, it has around 40 company registries, and many of them were created to increase economic growth in different free zones. And many of them that have different level of requirements in terms of compliance. So being compliance officer, it's sometimes very challenging to obtain information that needed. And we probably remember the FATF report released earlier last year in 2020, which mentioned that licensing authorities have only basic knowledge about UBOs and what information should be collected. So previously, they have been relying on the information collected by financial institutions. So it has been quite challenging for FIs to collect information. And specifically challenging is collect information about UBOs who are non-residents in the UAE. And in a way, we can be thankful to COVID that we have developed fintech, and a lot of information can be obtained now, and a lot of offers we have that information can be provided on a very high level, given high accuracy of identification and verification of this information. So in response to this observation, as mentioned before, the UAE government released Cabinet Resolution 58 to increase corporate transparency, and it makes life easier for financial institutions to obtain this information, as all organizations need to maintain information about UBOs. So all these challenges now can be dropped on the lower level, considering that we have requirements that all excuse me, I'm a bit worried that all organizations need to keep this information and maintain it all the time up to date.
Thanks, Ludmila. Yeah, I mean, many interesting and important points. Particularly from, as a practitioner's perspective, it's very interesting to hear your thoughts in that respect. Gavin, it'd be great to hear your thoughts also, based on your global due diligence work. I mean, what are some of the competing pressures involved in UBO identification? Why is it so crucial to work to address them? I mean, perhaps you could share with us some MENA-based examples of hidden company owners carrying out illicit activities, maybe to demonstrate the importance of this.
Yeah, so there's whenever I'm talking about any aspect of due diligence, there is one overriding reason why it's a good idea, and it's because it makes good business sense. So there's a reason it's called Know Your Customer, because as an organization, whether you're a financial institution of any sort, or you're a estate agent, or you're a law firm, or you're a non-bank financial institution, it's really sensible to know who your customer is. Just makes good business sense. So that's the first thing I always say to any compliance teams is, if you want to talk to your business about why it's important to understand who's behind a company, the best way of explaining that is because it makes good business sense. If you don't know who's behind a company, why are you onboarding them as a customer? Are they a ultra high net worth individual? Really, are they? Are they going to bring your bank money, or are they going to bring your institution problems? So the first reason is it makes good business sense, and that is true the world over. I think in the Middle East, we think about those 4 areas of risk: sanctions, corruption, counterterrorism, and of course also, especially if you're corporate, aspects of fraud. All of those are, for one reason or another, often a heightened risk in the region. Sanctions, for example, very, very dynamic environment nowadays. Who knows where Iran sanctions will be this time next year? And who knows where they'll be this time in 2 years' time? Maybe things will have changed for the better in that there will have been some level of agreement between Iran, the US, and the rest of the world. Maybe things will have gone the other way. So, and then we look at Syria, obviously continual conflict there, which is affecting sanctions again in the region. So conflict and international tensions mean that sanctions in the region are a heightened risk. If you don't know who's behind a company, you do not know whether you are exposing yourself to sanctions risk. It is as simple as that. And lots of organizations in the UAE and elsewhere understand what it's like to have a regulator investigating each and every one of their transactions to see if an entity in Iran or Sudan or elsewhere was behind it. So sanctions and the dynamic nature of those, that's particularly acute in the Middle East. Corruption, FATF and pretty much every other regulator around the world says that an entity that has as its owner a politically exposed person is not necessarily corrupt, but represents a higher risk of corruption. So from a corruption perspective, knowing if you've got a politically exposed person behind an entity means that you have to conduct enhanced due diligence. It is a fact that because of the business environment in the Middle East, actually there's a higher level of political exposure through companies in the Middle East. So if you're onboarding a company in Saudi Arabia, you do need to know if there are members of the, however extended members of the royal family that are associated with that company, so that you can take the appropriate levels of due diligence. counter-terrorist or terrorist finance, we've still got terrorist groups operating around the world, and obviously in recent incidents in Europe that demonstrate that only too clearly. Your ability to understand whether or not financial flows are related to terrorism is, of course, critical to the global effort against terrorism. Lastly, because I know there are some of our listeners who are not working in financial institutions but might be in corporate organizations, fraud. I remember not that long ago an interesting investigation I supported for a Middle East company where the head of marketing was channeling pretty much all of the marketing spend of the organization through entities that he ultimately benefited from. So he owned or members of his families owned. So that sort of understanding as a corporate who you're doing business with, why are you paying that consultant a flat fee of $1 million? Is it because actually they're a friend of the family, as it were? So from an anti-fraud perspective for a corporate, it's also important. All of that is why you have to understand who is behind a customer. But that's against a backdrop where financial institutions, corporates, and others expect to be able to onboard customers quicker, with greater ease, and actually increasingly tight budgets around managing the risk. So you've got these two things where you really need to know who's behind an entity, but actually the business says, we just want to onboard them because our customers expect to be onboarded very smoothly, very quickly, and with relatively little interaction. And those are two competing challenges, I think, for many organizations. So huge admiration to people like Ludmilla who are managing those conflicts.
Fantastic, thanks, Gavin. Some great insights there, and particularly around the competing or conflicting factors in play. But absolutely, you've got to know who you're doing business with, or who your customers are, and what sits behind the various structures that companies are doing business with. And we've talked a little bit about the catalyst behind recent developments to tackle corporate secrecy. So I'd like to turn now to what's ahead. Duncan, I mean, you've spoken to me about potential amendments to the Financial Action Task Force's recommendations on beneficial ownership, for example. Where do you see the quest for corporate transparency going?
Thank you, James. Well, yes, I mean, that is the immediate flashpoint. The Financial Action Task Force is meeting today, actually, to discuss what they can agree about the review of Recommendation 24. We understand that although there is a degree of consensus around requiring central registers of company beneficial ownership, which goes further than the current position of the recommendation, that some countries are blocking that. And we don't know which ones, because FATF itself operates as a closed discussion between governments. This is not some kind of nameless regulator coming up with some rules. It is a negotiation between governments, and some governments who engaged with the Financial Task Force are still resisting the idea that even they, as governments, should have this information. So that's our first expectation as to where progress needs to be made. And I think Pandora Papers demonstrates that this has been an issue in the United States, in places like South Dakota or Delaware, as much as it is an issue in regions such as the Middle East. But there are other things that could be strengthened in that recommendation, bringing about some consistency internationally around how we define beneficial ownership, which can be more complicated in different company or trust structures, and that would certainly help people trying to do this work themselves. Ensuring that there is independent verification of beneficial ownership information. I mentioned earlier that we have a lack of verification in the UK. In some other jurisdictions, there is a heavy dependency on the representatives of the businesses themselves, their professional service providers, to verify the information. And we would argue that that isn't independent, that they're conflicted. And if someone is intentionally obscuring their identity and the information they provide to authorities, that if that is being verified by someone who is for whom they are a customer, then that isn't independent, and that isn't good enough. There are loopholes. We've already heard this today about some of the difficulties around the use of nominee directors. Bearer shares are still in use in some parts of the world. And we think that undermines any effort around bringing confidence in people's knowledge of who they're doing business with, who is behind a company, when that can either be obscured or changed so rapidly in a manner which doesn't convey any need to share information about changes in ownership. And then finally, not every country, not every jurisdiction is going to be making a timely move to the best implementation of FATF standards, and therefore countries that are exposed to property ownership by foreign registered companies in perhaps some of those laggard jurisdictions ought to be taking matters into their own hands to ensure confidence and clarity around who are the owners of the foreign companies that hold real estate in those jurisdictions. So those are 5 areas where I think we could see this agenda move forward. I regret I'm not optimistic about all of those being agreed by governments meeting at the Financial Action Task Force this week. But clearly there's been a sea change in the position of the United States in the last year or two. And I think that almost as much as what's previously happened in the European Union is likely to drive this agenda with the kind of pace that you observed at the beginning, James.
Thank you, Duncan. That's interesting. I particularly like the point you make about independence, verification of UBO, because as you say, that really provides the confidence really that the transparency is there and the integrity of the information that people are accessing, which is clearly key. Abetted, I'd love to turn to you now, if I may, and just ask you about your views on where the UAE in particular is heading in this respect. A year and a half on from FATF mutual evaluation. I mean, from your perspective at the Ministry of Economy, what do you think will be the key focus when it comes to advancing beneficial ownership transparency across firms in the UAE's financial services industry, but perhaps also across other sectors as well?
See, when it comes to asset, the enhancement or the requirements, what was applied on all sectors, and even during that stage, what we did is we've conducted a number of workshops also to raise the awareness about the UBO with the private sector, the FIs, DNFPBs. We went also to the chambers of commerce across the UAE, including the law enforcement agencies, registrars. So we didn't miss anyone. We've included everyone during that stage. And going forward, what we are going to do is enhance our practices that we have recently applied and see if we encounter more challenges, how we can enhance the verification of the information, how we can ensure to be holding the accurate information, the type of documents that we would seek also extra from the clients to ensure the proper information was submitted and declared by those establishments. On other hand, it's, I think it will be the sanctions also applied. We'll try to make them more effective and utilize all the sanctions available, given that we have around 13 sanctions that we can apply on the non-compliant entities. That will really assist us going forward, ensuring that the information is available, is the accurate and up to date. And also there was an obligation on keeping those documents or submission up to date and if any changes happen to them within 15 days, they need to update their register that is within their premises, and also notify the registrar of this changes. And as I mentioned earlier, we have the NAR, where that platform would sit with all the information as a centralized platform with all the basic and BO information. And I mentioned there is a separation between the basic and BO information. On other hand, we are also considering some sort of a rejected list, where if someone was rejected before a registrar that is in the X emirate or in an X free zone, then that will be shared among all registrars to ensure that person is not shopping for a registrar, which we've encountered a few years back. But now it's like, given that all our procedures in terms of the basic and BO information are aligned and unified across all the registrars, on the other hand, to also ensure that is not being abused, a rejected list will be considered. And also we are working closely with the competent authorities to issue red flags and things that will alert the registrars on any things that have been identified previously.
Fascinating. Thank you, Abeid. And
Yeah.
you know, it's certainly a challenging task that you're undertaking with 45 odd free trade zones, across the UAE. So, fantastic, and great to see such a kind of proactive approach that that you're taking on this. At this stage, I think it's important to talk about the consequences of failing to adequately identify and vet companies and company ownership. Look, Mila, from a legal, regulatory, reputational and financial viewpoint, what does an organization risk, what are the risks associated with not carrying out adequate due diligence in this regard? Are there any MENA-based examples that you can share to illustrate some of these damaging implications?
Yes, thank you, James. It's important for organizations to understand risk. As a result, organization can breach number of regulations, and this can lead to significant penalties, loss of relationship. For example, if we are talking about correspondent banking relationship, because when we have new relationship or when we complete annual questionnaires, every financial institutions need to provide their level of requirements, what they have in terms of onboarding and processing transactions. So if we breach any of this, and our correspondent bank will understand that we don't have necessary level of information about customers that we are dealing with, we can lose this relationship. Financial institutions can lose even license. It can be withdrawn. It depends on the breach, and of course reputational damage. So talking about UAE, earlier in 2021, UAE Central Bank fined 11 banks, and combined fine is it's relatively low. It's 12.5 million USD. But considering that we didn't have any such examples in the UAE previously, this is first enforcement action, and Central Bank of the UAE said that they will keep imposing sanctions for those financial institutions for non-compliance with AML requirements. And as we know that UBO identification and verification, it's essential component of KYC and CDD obligations as a part of AML framework. So important now for financial institutions to understand with whom they are dealing with, to conduct proper identification and verification, and specifically with UBOs, if we are talking about UBOs. And again, mentioning about challenges with foreign directors, they need to pay specific attention to that, considering that we have around 40 licensing authorities. But now it's all brought to standard. Maybe it's on the way to bring to the certain standards.
Thanks, Ludmila. I think you're absolutely spot on that, you know, where fines start to being imposed, then it changes the mindset and certainly drives a change, behavioural change across many different institutions. So thank you, thank you for those thoughts. Gavin, a couple of weeks ago, we spoke about the importance of access to accurate and high quality data when you're carrying out due diligence. Would you be able to just tell us a bit more about some of the data trends you're seeing in the global information environment and that are of particular relevance to this discussion, particularly, you know, around beneficial ownership in the Middle East?
Yep. Yeah, absolutely. I mean, I think, well, let's start with the good news. As Abetted has clearly articulated with respect to the UAE, and as Duncan has kind of outlined globally, there is a trend towards transparency. Now, it might not be going as quick as many people would like, but there is a trend towards greater transparency around ownership information and corporate information more generally. That's driven by governments. It wouldn't be for me to say, but I imagine the driver for them is the ability to collect tax. So, you know, there's a proper financial incentive for governments to understand corporate structures so that they can recover the taxes that they think they are owed. It's also driven by institutions. You know, I was really interested to hear Ludmila talking about correspondent banking relationships. You know, organizations that want to operate globally need to apply global standards. That's the case if they're an oil and gas business, if they're a construction business, or if they're a financial institution. You know, if they want to operate around the globe, they have to meet the requirements of their global partners, clients, suppliers, etc. And that's encouraging transparency. And then lastly, it's driven by consumers, pressure groups, and others. And I think these leaks, the Pandora Papers being the latest, are a really interesting example of how there are actors outside of regulatory bodies, outside of government, that are forcing the pace in some ways on transparency. So the trend is towards a greater availability of information. Many of my customers and clients, and I think regulators as well, think, well, you know, it's all available now, isn't it? All these countries have registers, don't they? Can't you just get it like that? And they also think, well, you know, technology, you can get this stuff quickly now, can't you? Can't you just, you know, type it in and it comes back? So there's this sort of trend of transparency that people are aware of, and of course greater expectation that data is just there. The reality, though, is that around the world there is still a very, very diverse environment with availability of information. Some places you can get a lot, some places still you can't get very much at all. So if we think of United Kingdom, United Arab Emirates, and United States, you know, there's 3 jurisdictions, all with the first name being the same, but hugely different. UK, I can typey and bring back quite a lot of information, depending on what type of company it is. You know, and we've all heard about Scottish limited liability partnerships, and if you haven't, don't Google it because you'll get sucked down a hole. But, you know, there are some entities within the UK where still you can't get much information, even though generally in the UK, you can get a lot of information. We've heard a lot about the UAE, and it's different within the country. There's different jurisdictions in effect with different rules around the availability of information. The same is true in the US. Ludmila mentioned, Duncan mentioned Delaware and South Dakota, places that are now much more famous than they were a few weeks ago. So even in the US, where you think of this one country, you've actually got 50 different ways of getting information. So really diverse around the world. What does that mean for practitioners? It means that it's almost impossible to have a single unified approach to gathering beneficial ownership information on all of your customers and all of your third parties. Because if you try and have one single approach, you'll miss some things in some jurisdictions, and it will be uneven. I think you can drive towards consistency, though. And so that drive towards consistency, James, I think you used a phrase earlier, which was asking the right questions. And I think consistency comes from asking the right questions. The answers you will get back will be different depending on the jurisdiction, but at least you ask the same consistent question. And then I would ask an organization, have you used the data that is available to you? Your business has information about ownership. Have you got all of that in the right place in the right way? Because actually the people operating in the business, they know a lot. Have you used maybe third parties? No one has to use Dow Jones. There are lots of other providers as well, but there are third parties out there that are designed to provide information. Have you used one of those? If you haven't, a regulator is probably going to look at you and ask why. And lastly, have you asked the entity itself? If I were to say one trend that I would like to really encourage around the world is don't ever feel embarrassed about asking a customer or asking a supplier or other third party who owns you. If you're embarrassed or worried about asking that question, if you're embarrassed or worried about getting that most basic of data, you're probably embarrassed or worried about the relationship. And that tells you everything you need to know.
Fantastic. Thank you, Gavin. Some great insights in there. Thank you very much. I feel like actually there's a huge amount more for us to cover in many respects. So I'd like to really involve our audience now, as we do have some questions coming in. If anyone would like to ask more questions, please feel free to do so in the Q&A panel on your right. I'll do my best to ask as many as I can. We've got a few here. I will start. We've got two for Abetted, actually. The first audience question from Jitendra Gupte. Is the potential rejected list across UAE free zones likely to be made available in the public domain?
Unfortunately, at this stage, there is no direction to have it available for the public, but once it's completed, it will be shared among the registrars in the country itself. We just don't want them to we want to avoid them shopping for registrars in the country.
Understood. Thank you, Abetted. I've got a second question for you again from Jakal Ting. Noted that there are plenty of different company registries in the UAE. Are those registries all open to the public for searching? And where can I find the official websites for each registry?
Yes, please let me know if you can hear me, because it's
I can hear you, Abetted, yes.
At my end.
I can hear you clearly.
All right. We have a dedicated website, or like this registry can be found in the Ministry of Economy website, where you will be able to access all information, or like the basic information of all legal persons in the country, despite where they are registered. So if someone is registered in Jabal Ali Free Zone, or Dubai, or Ras Al Khaimah Economic Zone, or wherever they are, you can always find their information available in the Ministry of Economy website, and it's called the National Economic Registry. I put a link also for them when I answered, where they can go and find the registry.
Thanks, Abetted. I'm sure everyone will find that very helpful. Much appreciated. I've got another question now from Francisco Becerra for Duncan. a basic question: define beneficial ownership. When do you know that you have achieved a clear understanding of who the beneficial owner is?
Well, Francisco, it's an important question, though probably not a basic question, as I think you've heard Gavin and myself both indicate in this webinar. There is not one definition, and the way you go about having confidence that you've understood this in a particular case will also depend not just on where you are, but also the nature of the entity that you are looking at. One illustration of this is United Kingdom, where what we have is actually a register of persons of significant control. And it's not just the shareholding in the company that determines beneficial ownership, but also the degree to which one controls what that entity is able to do. And if you are in significant control of an entity, then that's every bit as much as relevant as simply matters of shareholdings. And with other entities, it's more complicated. So you take trusts, as you might find them in England. It's not simply a matter of counting shares, but understanding who is the beneficiary of a trust is something that lawmakers have been grappling with a view to trying to extend these measures to beyond companies to trust structures. So I'm afraid that whilst in many transactions this will be very straightforward, there will be some transactions where this is fiendishly complicated.
Indeed. Thank you very much, Duncan. I've got another question from Mohammed for Gavin. Both globally speaking and in the Middle East, should there be more of a focus on beneficial ownership rules for businesses outside the financial sector, DNFPBs, as the Financial Action Task Force would call them? Is this a loophole in current systems?
I think that non-bank financial institutions are catching up. FATF has obviously drawn attention to a whole range of organizations, professional advisors. We mentioned real estate firms previously. So there's a range of organizations that are focused on it from a anti-money laundering perspective, which of course is appropriate. I would also encourage all corporate organizations to consider how increasingly they are brought into a world of export control and trade compliance and sanctions that is making life a lot harder for corporates as well as financial institutions, and therefore increasing the need to understand who is behind their various suppliers and customers. It's not for me to say whether or not regulators should focus on one or the other. I suppose my view is, if you are in a compliance department in any organization, then I come back to the point I made right at the start. It makes really good business sense to know who you're dealing with, whether that's who you're selling to or who you're getting revenue from. Both ways makes good business sense.
Absolutely. Couldn't agree more. Thank you very much, Gavin. We've got a fifth audience question from Noura. Probably this could be to anyone that wants to put their hand up on our panel. We've spoken a lot about beneficial ownership in the UAE specifically, where there seem to be a lot of fantastic new initiatives in place. How does the legislation on beneficial ownership look in other jurisdictions in the Middle East? Is the UAE ahead of the curve when looking regionally? I don't know if anyone wants to take that.
Well, I'll be very, very brief to say that my sense is that there is a moment of momentum in the UAE at the moment. There are other jurisdictions in the Middle East that will be a long way behind because of regional conflicts or other issues. But also, it's driven by the market as well. There's a lot of commercial activity going on in the UAE, which is driving some of this agenda. So that's not to say there are not developments. Iran, obviously a very important commercial center within the Middle East, has and we were able to obtain information on ownership in Iran. It's complex, but it's available. Saudi Arabia is also making progress in terms of availability of information. So I think that it is improving across the region, which is fantastic. I think quite often we focus on the Middle East and think that it's in some way behind. But there are, lots and lots of jurisdictions around the world where, and I always come back to places like Delaware, where it remains really, really difficult to obtain information. So I think there's great stuff happening across the region.
Thank you. Thanks, Gavin. Yeah, progress, as you say. I think that's been underlined from what you're saying. I probably a sixth question we can get in here from Tom. Again, I think would turn this out to the floor for anyone to take up. Can anyone share with us any real life examples of big financial crime scandals that were aided and abetted by corporate secrecy and unclear beneficial ownership from the region or beyond?
Yes. I would point you to the Azerbaijani laundromat, as it gets called. There was a recent asset recovery case in London in which a settlement was agreed with the National Crime Agency to forfeit of the order of about £100 million worth of assets. And it was noted at the time that anyone utilizing the corporate network that acquired this name, the Azerbaijani laundromat, but is essentially a network of shell companies, should see this as a precedent that that assets held through those companies or with resources moved through those companies is tainted and is at risk of forfeiture in the UK. And we hope to see more law enforcement action off the back of that result.
And I'd really encourage everyone to look at those case studies, like the Azerbaijan laundromat, the 1MDB scandal as well, is a fantastic case study that everyone should really be focusing on. And there's some great literature around both of those now, that you can look at how it happened and how, as an organization, ask yourselves, would we have stopped this transaction? Would we have spotted this high-risk customer? They're both really great case studies.
Indeed. There's some fascinating case studies out there, and I think the barrage scandal is another obvious one that stands out. So some really interesting case studies. Thank you, and thank you to everyone. I'm afraid we're running out of time, so. We've got through quite a few questions, but we're not able to tackle all of them, but some excellent questions coming in from the audience, so thank you very much. We will endeavour to cover more of them in writing after the webinar, so thank you so much for your contributions. Please stay tuned for a summary briefing note about ultimate beneficial ownership in the Middle East. And if you'd like to find out more about the financial crime landscape in specific countries across the Middle East, you can consult Themis' suite of country risk reports, which will provide you with all the information you need to mitigate your exposure to financial crime threats whilst conducting business in the region, very much feed into your BRAs and CRAs. So for more details about those reports, they're available on the handouts tab on your screen, as well as on the Themis website. Perhaps before we wrap up, I'd like to thank our fantastic panelists today, Ludmila Starobor, Duncan Hames, Obaid Al-Meheri, and Gavin Proudley, for sharing all this fascinating insight with us. I don't think we could have hoped for a more authoritative views on this very current and very important topic. A big thank you also to Dow Jones Risk and Compliance for your support in organising and broadcasting this webinar. as well as the 3 previous ones in this 4-part Middle Eastern anti-financial crime webinar series. We greatly enjoyed working with you and look forward to many more interesting Themis Dow Jones initiatives in future. And finally, just to everybody who's dialed in from around the world, many thanks for joining us across the world, and thank you so much for listening. Take care. Bye-bye.